We have with us a very special guest. We've got Daniel Mudd with us. He's the CEO of Fortress Investment. As you know, he's also the former CEO of Fannie Mae. And we're going to bring, of course, another guest on very shortly, William Harvey of Hampton University, of which you sit on the board of trustees of this university. But before we bring him on, though, Dan, I want to talk with you a little bit about, obviously, the housing market and what is going on. We just saw the Case-Shiller numbers come in, pretty much lousy, right? The sense is, what needs to happen in order to get this housing market going again? In your view, what is it? Well,
we've got a couple years of foreclosures to work our way through now. There's a significant overhang. I think we've had an experience of the same problem that continues, which is very hard for buyers and sellers to know what the real demand is and what real price levels are. We've seen, I think, now a 33% peak to trough decline in national home prices. That's probably about a supportable level, maybe a couple of percent more. You're seeing a couple parts of the country develop some gains now, but I think we've got a very tough couple of years to work our way through. And it brings up the sort of existential question of our times, which is, do you kick the can or do you rip the Band-Aid off, right? And we've been kicking the can, trying to support the market.
So what's ripping the Band-Aid off for you?
We kind of pull back from the levels of support that we've had for the housing market. We let real rates rise somewhat. We increased the private participation in the market, which will result in higher mortgage rates and lower home ownership. There's been a broad debate, and the broad debate in the country seems to be moving in the direction to say, you know, we might have had too much housing. We might have had too much support for housing. That needs to come down to ground level a little bit. It's an important matter of national consensus.
So rip the Band-Aid off, and therefore that would get the supply down, essentially, and the demand back up.
I think it'll take the supply down to a level that people really understand. Here's the level of price support that can be effectuated in the market.
Okay.
And, you know, we'll see some confidence come back into the market.
Let me bring in William Harvey now. He's the president of Hampton University, which I just referred to, that Dan Mudd is on the board of trustees for, one of the leading black colleges here in the United States. He's also, by the way, a Pepsi bottling franchisee owner, I guess I would say, right, or a franchisee. William, as we were talking about the housing market here with Dan, I want to get your sense, as a small business owner, what are you seeing in the economy right now?
I'm actually very positive about the economy. Things are going well for our company up in Michigan. I've owned it for 26 years, 100% owner of a Pepsi-Cola bottling company of Houghton, Michigan for 26 years. As I look at our university, we get about 1,000 students in our freshman class every year, and we get about 12,000 applications. We're doing a lot of things economically.
Is enrollment up?
Enrollment is up. Enrollment is up. We have, with our trustees, decided to build 4 hotels, an office park. So as I look around, things are going really well.
But what about getting loans? It's got to be harder to get loans now for students, though.
Well, I'll tell you. We built a proton beam cancer treatment center. We opened our doors in August of 2010. And during the time when it was one of the greatest economic tsunamis that this country and the world had ever faced since the Great Depression, we were able to borrow $225 million at a pretty good rate of interest. So for us, I think that the strength and the diversity of our financial portfolio and what we were doing, the members on our board and I moved forward aggressively.
Okay. We'll talk about raising money. And, I mean, in the private equity world, it's tough to raise money these days, right?
It's a challenge to raise private equity money now. There are a number of funds that are coming to market. Some of the aftermath of 2008 has been you've got those that succeeded and those that didn't succeed. Those who've succeeded can raise money. At Hampton, the portfolio has been quite successful, affiliated with many of the winners, and I think that helps support the university and the students through the period of time.
What are you advising him?
Well, that's a private matter. He can answer that question if he wants to, but I won't.
Well, what do you see right now as the opportunity? I mean, what I was trying to say with, for private equity funds, for buyout funds, it's been a tough environment right now. It's been hard to get into deals. It's also been hard to exit deals as well.
Right. I think for the big mega buyout fund, blind pool, high leverage, it's going to be very difficult. A lot of money in the market, a lot of need to invest, a fairly crowded space. What we've done is focused on the areas where we've got a real expertise, some proprietary deal flow areas like transportation, senior living, financial services, where there's a dearth of financing outside the main core of money center banks.
Those are attractive to you?
Those are attractive to us, and we've tried to focus our efforts there, and we see good progress, we see good deal flow, and we see good returns.
Your stock, though, is down considerably since the IPO. What have you learned since going public with Fortress about what you need to do to get that stock to go?
Well, as a company, we're investors. We're investors in public markets. Public markets have been through a very tough time. We're one of the initial alternative asset managers to go public. So you're a pioneer in a lot of ways. And so how you align the structure of incentive for funds and limited partners with the overall interest of shareholders, took some work. I think we've learned an awful lot from it. We're, at the end of the day, 70% owned by founders, employees, boards. So in some sense, it's a public company, but largely every day we're thinking about performance, and we're thinking about delivering performance for our LPs.
Talking about returns, and I was kind of joking with you about what you're advising William Harvey on his endowments, but I know that you increase your endowments, hugely, in large numbers, almost $250 million now. What kind of returns are you now seeking? Where are you investing that you think you're going to get the biggest returns?
Well, actually, we're investing in a number of different things. I talked about building hotels. We're investing in real estate. We're investing in the market. We actually are pretty bullish on the economy. I know that that's kind of swimming against the tide, but we're pretty bullish on the economy. We're investing in a number of different sectors. We have an investment committee on our board, some pretty wise people to advise us and work with us, and we're going to continue to be diverse and continue to do well.
Dan, what about in distressed assets? Any opportunities there?
There are tons of opportunities in distressed assets. I think what's happened a little bit is that the distressed trade has moved its way through the market, that just mere securities are beaten down, buy them low, recover some beta, sell. Underneath that, though, are an enormous pipeline of very interesting special situations where you've got to go in, understand the deal, get your hands dirty, do some restructuring, do some work, and proceed from there. So we like that business very much.
Daniel Mudd, thank you so much for joining us, the CEO of Fortress Investment, and of course to William Harvey as well, the president of Hampton University. Thank you very much for being with us on the program.